All
Okay,
right.
good morning, Blaine.
Morning, Helene. How's it going?
Good. How are you doing today?
Good. Doing well. Doing well. Interesting day in the markets. Definitely things are moving and shaking, and there's some, obviously some catalysts getting, the markets moving today. Not necessarily in the direction everybody wants, but that's why we're here today. We're here to break it down and share with
hmm
folks, what's going on, what's moving them, and where we're still seeing some opportunities. So excited to be sitting down here, breaking it down with you today.
Same here. Same here. I'll let you go ahead and take it away as we jump into the market overview.
For sure. Yeah, let me go ahead and do that. And first, actually, Helene, I wanted to actually kick off this call and just review a trade that we spotted in this call on Tuesday. So, we had the
Okay.
last TOD live call on Tuesday. Each of us spotted some great looking trades, both of which are working out quite well. But one of them, it's a trade actually that I took. I was going to go ahead and share this here. So let me go ahead and share my screen, folks, so you can see what I'm looking at.
Let's see it,
Um,
Blaine.
yeah, one second here. I'm getting it all pulled up. But here's the trade that I had that I spotted on Tuesday. So, of course, here we are sitting here today. It's Thursday. This was the day right here where we had gotten together on Tuesday, and I pointed out, all the technicals were really aligning. There was some market narrative behind it, the narrative of rate cuts coming and potentially numerous rate cuts coming. I knew that that was going to provide a massive boost to this area of the stock market, namely the home builders and everything that's kind of tangentially related to them. And so, the PHM was the trade I spotted on Tuesday. It continued to rally throughout the rest of the day. But if you remember, I entered, it was a 115 strike call for PHM. And it, performed pretty well throughout the end of the day. It was up a little bit. It was, maybe had about a 10% profit, but you can see the action that PHM had yesterday, Helene. It had just a
That's
massive
huge
leg
move.
higher. The stock closed at about 123 on Tuesday. And by yesterday, at the end of the day, it was trading, had topped actually 131 intraday, but was trading all the way up to $130. So that move that the technicals, looking at these charts had, forecast was very likely had a high probability of happening. It's exactly what unfolded. Saw some massive buying pressure, flow into the stock, really push the PHM price higher. And that call option that I entered live on the call on Tuesday, actually, it worked out quite well yesterday. I was actually able to go ahead and close that trade out for a 51.1% return,
Wow.
which for one day trade, Helene, I was really pleased with that one. I was glad to see that one work out, and
Heck, for a
even more
longer
excited
trade,
that I
even, that's a great return,
yeah.
let alone a one-day trade. That's awesome.
Yeah, exactly. So, not to it's not to brag on it, but it's just to say that, like, hey, look at what these technical analysis tools, we're able to spot. That's why we're here. We love having these sessions because we're showing you how these systems work. This is exactly what Helene and I use in our own trading, going out and spotting these opportunities out in the markets. And this is just another latest example, in a very strong bull market of it spotting, another great opportunity, and this one happened to work out in just 24 hours, which I was thrilled about. So I hope you all had seen that trade when I placed it. I'm not sure if anybody else had followed along in that trade or not, but I was definitely really glad when I opened my account yesterday and saw how that one had turned out.
Absolutely. Well, that's a great trade, Blaine. Yeah, amazing winner there. That leg higher. I mean, that's awesome.
Yeah, I mean that's you see any type of bar like yesterday, you see that show up on any stock or option that you own. That's always a nice day for sure. So
Absolutely.
definitely love to see that one. But so folks, with that, yeah, I just want to cover that trade that we did, and highlighted in the call this past Tuesday, just to, kind of recap it, see how it worked out. But then, I want to go ahead and hop into our market overview for today. So, of course, the index level, we haven't had a massive move. Just yesterday, Helene, we continued to break out to new all-time highs, both intraday and closing high. We closed above 6450 on the S&P 500 for the first time ever. So it was, again, yet another all-time closing high. Today, we're starting to retract from that a little bit. Folks, you probably saw, that we had another really crucial inflation report come out this morning. It was the July PPI number. So it's the producer price index. So this is more wholesale prices. This is what businesses are paying, to get their stock and, all of their items, available for sale. And for July, Helene, it was actually the market forecast and consensus was that it was going to have risen by 0.2%. It came in substantially higher than that. It came in actually at 0.9%. So it just kind of blew the expectation out of the water. And you and I were talking just before the call. We're kind of surprised that the market is not down more than just 0.2% because of
Absolutely.
that.
I mean,
Because they're
I was shocked that the market is holding on where it is and didn't have more of a washout down almost because, we've been riding this news higher with the hopes of additional rate cuts. That's really been what's been propelling us higher in this last leg up. So to get a report like this that really, tampered those hopes, it was shocking, shocking that we're not lower than we are right now.
Yeah, exactly. So, it has kind of put a little bit of a pause in the rally we've seen, over the past week and a half, 2 weeks, coming off of that slight dip to begin August. So we did recover very quickly off of that, but this has kind of throttled, the brakes a little bit, tapped the brakes on that just, again, just screaming move higher to all-time highs. Because now this is a fresh new piece of evidence in the camp of, okay, well, maybe we're still due for a rate cut in September. If you look at Fed Fund Futures or the CME Fed Watch tool, it's still projecting the market consensus is still that we were going to get a Fed cut or a rate cut from the Fed in September, but that it's potentially just going to be a smaller rate cut, just a normal cut, 25 basis points. Some people had started getting maybe a little over their skis, anticipating we might get a 50 basis point cut in September. I don't know if the data may necessarily have warranted that, but there were definitely some talks about that. Some people, saying that they hope for that. So some of those, expectations and hopes may be getting tamped down a bit. So, we'll just have to continue to see what the reaction is from the market, and specifically, Helene, what's put some pressure under stocks. It's not just that report, but it's the effect of that report. It's what it's the effect of that report on the bond market, bond yields, which directly translate to the economy, via consumer lending prices. Because largely, interest rates, they're going to be priced off of U.S. Treasury market, namely the 10-year, which we're going to cover here in a second. But it's kind of the knock-on effects of what happens after that PPI report gets reported. Not only was the inflation higher, it seems to be a clear sign that at least businesses, although by and large, outside of a few smaller, less significant pockets of the economy, even though the inflation has not really come through and manifested itself in consumer prices as of yet. This is a clear indication that it's starting to creep its way into the prices that businesses are paying, to build up their stock, to build up their inventory, and that it's either going to be passed through the consumer, or it's going to take a hit on margins, or it could be a mixture of both. And so, maybe perhaps that's what we're in for, and it's not going to lead to a big, huge spike in consumer prices, and it's just, they're going to, kind of find a way to massage it out, so it doesn't, have a big hit. But nonetheless, the market is definitely reacting to seeing those wholesale prices businesses are paying, having taken a significant leap higher, much more than was anticipated in July. So, Helene, anything else we want to cover here? I mean, I know the trend's still intact, so obviously
Yeah.
still, not super concerned about the overall trend, but anything else you want to cover here in this chart?
I think the one thing I would say was, yesterday looking at the chart and the technicals, we did hit that overheated point for SPX. And so bad news like we got today, you would expect it to come down. I mean, once the market becomes overheated, it's looking for a reason to sell off, take some of those profits off the table, and pull back from those highs. And so that's just what we're seeing today. Whether it was this or something else, it's to be expected at points, especially when we're seeing overbought or overheated conditions.
Yeah, exactly right. Yeah, I know. As you said, our short-term technicals, it was due for a retracement. Again, sometimes those overbought conditions can last, a little longer than you may anticipate. We've communicated that in the past, but yeah, it's when you get into that, kind of stretched from the median, trading environment, that's all the market's looking for, is just for a reason to pull back. So that's exactly what happened today. So I think I'm gonna go ahead and pull up the next chart here, Helene. So
Right.
The next one, this is, as I was kind of alluding to earlier, we're just going to look briefly at a chart of the 10-year U.S. Treasury. I looked at this actually in my session yesterday, Helene, the eye-opener session I did with John. But
Okay.
of course, this is a major proxy that's very important for the stock market and stock market investors. Even if you have no interest in bonds whatsoever, this has a large sway over stocks at certain times, and that's absolutely what's driving price action today in stocks. Is you can see the bar right here. This is a major leg higher. And it's actually, if you're following along, that would just look at the chart, looking at the technicals, that would be a bullish engulfing bar signaling a potential reversal of the recent shorter term, excuse me, downtrend that we've been in. So, again, this chart's looking at the 10-year U.S. Treasury bonds yield. So you can see it's currently about 4.29. So, it's starting to creep back up to 4.3%. That would still be in a downtrend over the past, this chart's looking at 7 months. So it would be, still down from 7 months ago. It's still trending down over the past 3 months. But still, nonetheless, seeing a big spike like this in the 10-year U.S. Treasury yield because of what this means to other areas of the market. This is the proxy for which mortgage rates are priced off of. Many consumer lending rates, some of the borrowing rates for businesses. So when this spikes, that directly translates to higher cost of capital, higher borrowing rates for both consumers and businesses, which of course ultimately can trickle through the system and affect companies' profitability or consumers' profitability and willingness to spend, things like that. So that's why this is such an important proxy for the markets, particularly when you get an inflation report like today, leading to a massive spike in this. So just wanted to show you this chart that this is this major move higher today. That's a really large move in one day for a bond yield. So seeing that's what has gotten stocks a bit under pressure today. So
So
Blaine, anything else?
Blaine, people that, maybe don't know anything about the bond market or maybe don't really understand how this affects stock market, can you just give like one sentence as to what that means for the market or the future movement or anything like that? What are you taking away from that?
Sure thing. So if you allow
One
me, I'll say
sentence.
2 sentences. One sentence is when you have a spike in U.S. Treasury yields it translates to higher interest rates for both consumers, such as ourselves, or businesses. So when you have higher interest rates, obviously that means you're having to shell out more money to cover your debt. The second reason is also too, when you have bond yields beginning to start creeping up, in this case, the 10-year, but if you have U.S. Treasury yields creeping up, that creates more competition for the investment dollars out there. So of course, there's a finite number of investment dollars out there. You and I, we have a limited number of dollars in our investment accounts, as do large institutions, even though obviously much larger. All those dollars are looking for a home to be invested somewhere, right? So when you see yields start creeping up, that starts to make more competition because if you can park your money in a 10-year U.S. Treasury bond at a higher yield, sometimes the higher that yield goes, the more attractive that begins to look. So that's kind of part two. So to really slim it down, higher interest rates, more competition for investing dollars. That's why it's really important to watch this.
Okay, so a spike like this, would that mean potentially the market would be going down from here or up from here?
In this scenario, it would mean downside pressure on stocks. So it
Okay.
be leading to selling pressure on stocks. So I know the bond market's kind of this black box thing. People, nobody's following the bond market by and large, but it is important from time to time. It's not always important, but there are certainly times that it, has its effects on the stock market as well. So it's important to at least try to understand these concepts. I know we have a really smart audience, and I know that our audience is very interested in things that are moving stocks. So
For
just
sure.
wanted to cover what that is. But anything else to say here, Helene?
No, I appreciate you giving us that that more watered down version as well, because you give that higher overview version, but then also just like, what does this mean? How does this apply to me? How does this apply to my trades? So that's really helpful to get both of those perspectives.
Exactly. Yeah. Yeah. Just kind of bottom line, if you have it moving up in a big way like it is today, for the reason that it's moving up today, that can put pressure on stocks to the downside. So,
Makes
you know,
sense.
yep. So
Good.
that's just kind of the boiled down version. But with that, Helene, I think we had a couple additional trade opportunities we had for today. So, now
Yes.
we've kind of covered what's moving markets, what's got stock prices moving.
Mhm.
You may go ahead and jump into my trade, or do you want to do yours first?
I think that I'm going to jump into mine first.
Okay, go ahead. Yeah, let's see what you have.
Okay, let me go ahead and share my screen. So today I am looking at Robinhood Markets, symbol HUD. And I have been a big fan of Robinhood for a while, and it's hard to not be if you're just looking at this chart. I mean, we're technical traders, we're trend followers, we're momentum traders. The momentum has been here in Robinhood. It has been for a prolonged period of time now. Obviously, since we saw that bottoming out in the market in April, when all broadly, most of the stocks saw that bottoming out process and then that trend higher. Robinhood Markets was a clear breakout early on. Blaine and I actually saw this early on. We initiated a number of positions for Robinhood Markets in various services that we help to manage, and it has sustained this trend and has really shown that it's a resilient trend, a long-term bullish trend. We see that early August trend reversal testing to see if it wanted to break down from there. It went ahead, traded higher off of those lows. And right now we're seeing another really great entry opportunity for Robinhood Markets. We see that confirmed long-term trend here with the two moving averages. We have the 35-day EMA and the 200-day moving average. The stock is trading above both of those, confirming the buy signal and the bullish trend. RSI wise, we can see it's not currently overbought. It's below 70, and it appears to be trying to start trading higher RSI wise from here, which would confirm that bullish momentum starting once again up for Robinhood Markets. And then also, we're seeing, as I said, those higher highs, higher lows, those 52-week highs. These are all very, very bullish indicators for a stock. So right now, as we can see, this recent movement, we saw a pullback off of those highs over some overbought trading and a pullback to the middle channel and a hard bounce off of the middle channel. This is a very bullish sign for the stock. It oftentimes, when a stock that's in a bull trend makes this movement, it trades higher from here. So I'm looking to jump in here for Robinhood. I wanted to do a call option purchase, but there is so much time value in these options. I would be having to pay way too much in time value today. So I decided to go a different route, do a call option debit spread here. I'm looking at September 19th options, buying the 90, selling the 95. It is 4 points, so it does not break the bank. And the price is jumping around. So I'm going to do a limit order for 410. I'll see if I get filled later on today. It was below 4 earlier when I looked at it, but options bounce around as they do. So I'll go ahead and submit that order here and we'll see. Oh, yeah, immediately filled.
There you
Okay,
go.
great.
Awesome.
So it should be around a 20% profit potential or so on that position.
Yeah, no, Helene, that looks great. It's a nice in the money debit spread and has significant downside protection too. I mean, that spread, it's a little more than 10% in the money, has a great profit potential of about 20%. That's a killer looking trade. Some of the news that brought Robinhood down off those highs yesterday, that it's definitely a more advantageous entry point, after that bit of a pullback. It's back down near the middle channel now. So awesome looking trade set up there. So really like that one. Have to follow it and see how it's working out next week.
I appreciate it.
Absolutely. So I'm going to go ahead and take over the share yet again because I have a trade opportunity I was bringing in today too. And this is mine for today, Helene. It's something I've been tracking for a while. Obviously, kind of the backbone per se of this bull market that we're in right now has largely been AI related, largely on the shoulders of the major semiconductor companies. Names like Nvidia, Broadcom, ones like those that are they're really making the backbone of what's driving this AI revolution. So of course, that's what we're looking at right here. This is the SMH. This is the VanEck Vectors Semiconductor ETF. So this is an ETF that holds a basket of numerous semiconductor stocks. Of course, some of the most heavily weighted ones in this ETF are going to be the NVIDIAs, the Broadcoms, AVGO, or AMDs of the world. So ones like that. So that's what this ETF is going to be invested in. And you can see this, the price action on this chart, it's reflective of the massive bull market that we're getting in technology, specifically in the AI space, largely related to these AI related semiconductors. So, stock, of course, or the ETF here, rather, it bottomed out in April along with the market, had a very quick V-shaped recovery, and then broke out to new all-time highs shortly thereafter, in the following subsequent months. And so you can see just an incredible stretch of higher highs and higher lows, making all these new all-time highs all along through here. Of course, we have a nice trend line buy signal here on our chart. We can see our 21-day EMA. It's our red line. See where it crossed over our green line right here back in mid-May. So we had a very clear and decisive buy signal occur on the chart. They've continued, those two EMAs have continued to maintain that relationship ever since then, keeping a nice wide gap between them. You see where SMH is currently trading at today, just about $300 per share. That's above both of our EMAs. So that's an additional bullish buy signal for this stock right here. So, another really strong looking setup. Now, if you look at where the ETF is trading today, we also have our Keltner channels overlaid in this chart too. So that's going to be our blue lines here. So you can see here's our upper Keltner channel band. Here's our lower band. And we have a dotted blue band here in the middle. That's our middle Keltner channel. So you can see at the highs of yesterday, SMH made just a brand new all-time high, both intraday and closing yesterday. Intraday, it did trade above that Keltner channel onto the upside, trade above the upper channel. But the ETF has pulled back a little bit today. It has retraced, so it's offering us a little bit more attractive entry point for a trade today in the midst of this very powerful bullish uptrend. So, this is an ETF I've been eyeing for quite some time. We had a bit of a consolidation, through mid-July to about the first week of August, but it looks like now, as the ETF has broken out to new all-time highs in the past couple of days, it looks like we're getting some reacceleration of momentum in this ETF. So this is exactly the type of trade setup I'd be looking to target. And I actually landed on a call debit spread myself, just like Helene did. And it was this one right here for SMH. I was looking to October 17th expiration. And specifically, I landed on these two strikes right here. So I was looking to use the 270 strike call as my long call. So I'd be buying to open the 270 strike call, and I'd be selling to open the 280 strike call. So you can see I have my limit order set up doing this right here. So again, buying to open the 270, selling to open the 280. And the price has bounced around a little bit. When I found this, it was just a touch below 7. So if you got into this trade at 8 points or less, of course, you would have a 25% plus profit potential. I'm just going to go ahead and put this one on. It looks like if I put my order in, just because of the width of the bid-ask spread, if I put it in at a limit price of 8.1, I'll still have a nice upside on this trade. It's got some good downside protection, given that this is an in-the-money call debit spread. It has about 7.5% downside protection, so meaning that SMH could drop about 7.5% come option expiration, and this trade would still be in the money and on pace to have a profit come option expiration. So I'm going to go ahead and submit my limit order at 8.1 points for this trade. It looks like we have a pretty good chance of getting it filled there. So I'm going to go ahead and fire that off right here. And there you go. I just got it filled right at my limit order. So got that trade on. And just to show you again, hey, Helene, you back?
Yeah, I was just saying, I love the trade. I have to say that my second choice today that I did not go with was AMD. So along the same vein as you, semiconductor. So I love the play, and I think it looks like a great trade.
Appreciate it. Yeah, thank you. And just to show the folks on the chart where this trade is. So like I was saying, this is an in-the-money call debit spread. So for this trade, I bought to open the 270 and I sold to open the 280. So remember, I paid 8.1 points or $810 to put that trade on. But since this is an in-the-money call debit spread, remember I sold the 280. As long as SMH is trading at or above my short strike, in this case 280. So as long as SMH is trading at $280 or above come option expiration, then that trade would be on pace and be set up to realize its full profit potential. So, that is a really, strong looking trade. There's some support on the chart for me there at the 280 level. So I was really excited when I spotted that trade here today, Helene. So I know there's
I love it.
one other thing that we wanted to go ahead and talk about here to close out today's session, but it's something super exciting. We've been talking about it for sorry, hold on. There's one question there. I see Ifosa is asking what's the expiration date. So it's the expiration date for that trade, sorry, for SMH was October 17th, was the trade that I was looking at there. So just to clear that up, that was the trade that I had. But as I was saying though, Helene, we've had something pretty exciting going on here with our team this week. It's been we were finally able to unveil a just incredible trading tool that we've been working on in trading strategies called the Everyday Income Alert Strategy. It's paired with the trading tool that spots it's a very high frequency strategy. It's spotting a setup every single day near the market close. It's unlike any type of trading strategy that we've ever had a product that targets this type of strategy before, but it's targeting this everyday setup near the end of the close to be held overnight, exited shortly thereafter. I've been trading it myself. Helene, you've been trading it too. I know I've had
Yep.
my trades
Mhm.
every single day this week thus far. Closed out. So I closed out on Monday, Tuesday, Wednesday, and now today, Thursday. Every single day I've had a profitable trade close following this strategy. It's really exciting. I love the high frequency trading. It's designed also specifically to avoid some of the things like the pattern day trader restrictions, if you're familiar with those. So it's a really unique, very strategically set up strategy. A lot of thought and testing was put into this. In fact, Helene, you've been trading this yourself quite a bit recently.
Oh
When we
yeah.
were kind of honing it, in and putting the finishing touches on it, and you actually had a pretty great success rate. You want to say a little bit more about that?
Absolutely. Yeah. I had almost an 80% success rate with all the trades that I had taken. And what was it? If I had invested $1,000 into every trade, it would have turned into over $14,000 in profits. And so I've had great success with it. Just in the last week, I believe it was 6 out of the 7 trades have been winners. So it's a set it and forget it type of trade. It's been working great, and we're really, really excited to be able to share this with everybody.
Yeah, absolutely. And in the last, I think it was like the last 3 months, when you were trading this every single day, didn't you have near an 80% win rate on the trades that you were taking?
Exactly. Yep.
Yeah,
Yeah,
I
and
mean, it's
testing has also shown that over an extended period of time, that same success rate has held true.
Yeah, I mean it's really unique, and the what this strategy is actually looking to exploit is that we did a lot of historical testing. We're trying to figure out what is the average move of the market on any given day. Of course, there's going to be days where there's big moves, there's big gaps up, big gaps down. That happens. We all know that. It's great as a long buy and hold investor to have those types of days. But if you're actively trading in the markets, there's other ways you can try and trade other than just the traditional buy and hold, long-term hold strategy, right? So, we were trying to figure out what is the exact, average move on a day-to-day basis for the market, whether up or down. And we figured out that on the vast majority of days, Helene, you could probably tell me the exact percentage, but the average move for the S&P is less than a 0.4% move, whether up or down on any given day. And so we designed, Chuck and our team, we designed the strategy specifically to exploit that, giving us this trade strategy that's, designed to take advantage of that and also some time value decay with entering that trade near the market close, holding it overnight. So if you haven't had a chance, I'm sure some of you probably had a chance to attend one of the sessions. They've been absolutely free to attend to learn some more about the strategy. But if you have not, I'm going to go ahead and post a link in the chat right now. It's going to give you an opportunity. We don't have that many more opportunities left to share that this week. So if you haven't checked it out, I would highly encourage you at least to just go, watch the video, watch the session, to see what it's all about. Again, attending that session to learn more about it's completely free, so no risk to you to go check it out. But
Yeah.
we've been loving the strategy here. Of course, nothing's going to win every single time. No strategy is perfect. Nothing's a crystal ball. We all know that. But being able to have the strategy, finding a trade opportunity and setup, it includes a trading tool that actually finds the setup every single day, and you just log in and check it out near the market close. and having the success rate that it's had has been really exciting. So
And also just to say, this is unlike any other Chuck Hughes product that we've ever had. This is completely different from every other thing that we've ever come out with. So brand new, completely different, and it gives you the opportunity to go after 20, 30, 50, even sometimes 100% returns with just an overnight trade. So it's really exciting. It has been working really great, and we are just so excited to be able to share it with you all.
yep, exactly. Yeah, it's super exciting. I highly encourage you. I would love for you to check it out and see what it's about. I mean, I've been loving the everyday income alerts. Helene, we were driving around this morning running some errands before work, and I got an alert on my phone that my trade closed out for 20% win, and I placed that trade yesterday while the market was closing, and you just get a little ping on my phone while I'm sitting at a traffic light that, hey, you just locked in a 20% win. So I was like, hey, there we go. That's exciting. So I've been really enjoying it. Our team is thrilled with the strategy, so would love for you all to have the chance to check it out too. So, Helene, anything else before we sign off for the week?
Lane, did you just want to jump in this question? It's from Jim in the chat.
Oh, let's see. I actually didn't even see that we had a question in there. Let's see. Sorry about that, Jim. I totally missed it. It's over here talking and giving a soapbox speech. My apologies. I missed your question. Um, so, Jim, I see what you said here. So it says you're
And
fairly new to the channel, member of the WOA service. So talking about a debit spread trade for Microsoft that's in there, talking about the dividend coming up. So I guess their ex-dividend date's coming up. So it's a good question, Jim. One thing I definitely would encourage you to reach out to your broker just to figure out, because I'm not sure exactly. Each one has their own individual, options policy about how they handle things like this. When a stock is getting ready to go ex-dividend with a debit spread, how they actually sort that out for the options, if you have a short option. So first, I would just highly encourage you just to contact your broker just to get some clarification on what their in-house options policy is, because it does vary from broker to broker about how they actually handle this, and there's some different variables in there. But one thing when that does come up, if you're concerned about the early assignment risk because of the dividend, one thing, the trade is covered because it is a call option debit spread, at least just talking from our perspective with the trade that's in the portfolio. For a debit spread, it is covered, so you do have that short leg of the spread, but you also have the long leg. So again, please don't quote me on this because again, every broker's policy is different, but generally, if the short leg of the spread were to get assigned, most brokers, again, please don't hold me to this because everyone has a different policy. I don't have every single broker's policy memorized. But generally, they're going to automatically exercise the long leg of that spread, which would lead to the spread realizing its full profit potential. Now, again, please highly encourage you to call your broker, confirm this, make sure that that's their company policy. But that's generally how that turns out. So
yeah, and then just a couple other questions. I think we should just say our trades one more time because we did have some questions about that again. So my trade for today was the hood, as in Robinhood Market, September 19th, 2025, 90 and 95 strike call option spread.
Yep. And so my trade that I highlighted today was for the SMH ETF. It was an in the money call option debit spread as well. I was using the October 17th expiration, and I bought to open the 270 strike call, sold to open the 280 strike call with a limit order, got it filled at 8.1 points for the spread. So that was my trade as well. So I think that
That was all the questions we had.
awesome. Perfect. And perfect, Jim. Yeah, definitely check with them about that one. So
And we appreciate the questions, guys. We love to get to answer these
yeah.
live and interact with you all. So, we're so appreciative that you guys are all here and trading alongside of us and all of that. So, just love the engagement, love getting the questions. We're always happy to answer them.
Yep, exactly. I love the engagement. So please, folks, we'd love to have you in these rooms. I'd love for you to keep attending. Helene and I were here every Tuesday and Thursday doing Trade of the Day live, pointing out, talking about what's moving markets, what the charts are telling us, trying to block out all the noise and just simply just seeing, what the charts are telling us, what the technicals are telling us, and then going from there and trying to figure out whatever trade opportunities we see out there. And as you've seen, we spot a trade we really like. We're gonna try and place it right here in the call. because we're putting our money where our mouth is. We see these opportunities. We're not just saying these are hypothetical opportunities. It's ones that we really like, and we're trying to hop in on and trade. And we're trying to show you exactly what drives our trading, how we spot these opportunities, so you all can learn this for yourself. Really appreciate you all being here. Thanks so much for attending. Hope you have a fantastic rest of your week and weekend coming up. Enjoy all that, and I'll be hoping to see you all back here on Tuesday. Helene, thanks so much.
Yeah, thanks, Blane. Hope everyone has a great weekend and a great rest of the week.
Awesome. Take care, everybody.